Hi everyone, I hope you guys are studying great for your examinations. I am Khushboo Chokshi and today we will be discussing all the past questions that have been asked under the Indian Contract Act. What are the type of questions that are being asked? So coming to the first question, the notes will be shared on the Telegram channel. So if you wish to download them, you can download it from there. ABC Limited sells its products through some agents and it is not in their custom to sell the products on credit. Mr. Pinto, one of the agents, sold the goods of ABC to Messrs. Parul on credit, which was insolvent at the time of such sale. ABC sued Mr. Pinto for compensation towards the loss caused due to sale of products to Messrs. Parul. Will ABC succeed? So there are two things. First, that when an agent is dealing, he has to act within the scope of his authority. If he has been specifically told not to sell the goods on credit, he cannot sell the goods on credit. So that is one thing. Also, when he is selling, he has to exercise due diligence as a man of ordinary prudence would. When you are selling your goods, you will check whether the person is insolvent, not insolvent, whether he's good, whether if you're giving it on credit, whether he'll be able to give that money back to you or not. So here he has not exercised due diligence, and secondly he has acted outside the scope of his authority, and since he has not acted within the scope of his authority, the principal cannot be held liable. Give four differences between bailment and pledge. You can put it in a tabular form if you wish to. Mr. D was in urgent need of money amounting to rupees 5 lakhs. He asked Mr. K for the money. Mr. K lent the money on the surety of A, B and N without any contract between them in case of default in repayment by D. To K. D makes default in repayment. B refuses to contribute whether B can escape liability. So here the co-sureties have given their approval. It need not necessarily be like a written contract, even oral approval is fine. So here, since they have already given their approval that they are going to be co-sureties, and if the principal debtor makes default in payment of the amount to the creditor, then all the co-sureties will be equally responsible unless there is an agreement where they have limited the liability, limited the amount of their liability. So here B cannot refuse, he will be equally liable to pay the amount to the creditor. Rahul, a transporter, was entrusted with the duty of transporting tomatoes from a rural farm to city by Ashwin. Due to heavy rains, Rahul was stranded for more than 2 days. Rahul sold the tomatoes below the market rate in the nearby market where he was stranded, fearing that the tomatoes may perish. Can Ashwin recover the loss from Rahul on the ground that Rahul had acted beyond his authority? Here we have to write that since he was stranded and that the goods that were with him were perishable, he has acted as an agent of necessity, and when there is a necessity, he can go beyond the authority that has been given in order to protect the interest of the principal in a way that a man of ordinary prudence would. So here what he's done is the correct thing, and since he is an agent of necessity, the principal cannot recover anything from him. Mr. Chetan was appointed as a site manager of ABC Constructions Company on a 2-year contract at a monthly salary of rupees 50,000. Mr. Pawan gave a surety in respect of Mr. Chetan's conduct. After 6 months, the company was not in a position to pay 50,000 to Mr. Chetan because of financial constraints. Chetan agreed to a lower salary of 30,000 from the company. This was not communicated to Mr. Pawan. 3 months afterwards, it was discovered that Chetan had been doing fraud since the time of his appointment. What is the liability of Pawan during the whole duration of Chetan's appointment? So here first thing is that Chetan had a salary of 50,000 which has now been reduced to 30,000 and without the consent of the surety, and hence the surety cannot be held liable for the acts that have been done by him. For the previous acts he may be held liable, but for something that has been done after the terms, there is a variation in terms of contract, then he will not be held liable. There is a Thomco Bank decision which says that if the variation is beneficial or the variation is not of a great difference, then in that case the surety will be liable. So if you want to write that down, you can, but the institute never uses the Thomco Bank decision in its answer. So if you don't want to write it down, just mention that the surety, there's a variation in terms of contract, surety is not aware of it, surety's consent is not taken, and hence surety will not be liable. Sorry, yeah. What are the rights available to the finder of lost goods under section 168? We have been doing this since foundation and something that we can write. Amar bailed 50 kg high quality sugar to Srijit, who owned a kirana shop, promising to give 200 at the time of taking the bailed goods. Srijit's employee, unaware of this, mixed 50 kg of sugar belonging to Amar with the sugar in the shop and packed it for sale when Srijit was away. This came to light only when Amar came asking for sugar he had bailed, which Srijit, as the price of specific quality of sugar, had tripled. What is the remedy available to Amar? So here when the goods are bailed, first thing is you cannot mix the goods bailed with your own goods. If you mix the goods bailed with your own goods, there are two scenarios, whether the goods can be separated or it cannot be separated. If the goods can be separated, what will you do? Is that you will give as a bailee, because you have mixed the goods. Whether you do it, you are employed as it, doesn't matter. You are a bailee, you have to be responsible for it. So here, if the goods are separable, then you will have to give the cost of separating the goods from the bailer goods from your own goods. That is one. If the goods are not separable, like in this case, you can't separate sugar no matter how much you wish to do it, you cannot separate sugar. So the goods are not separable, then in that case you will have to give the entire cost of that sugar back to the bailer. So in this case, the bailee Amar will have to repay the entire cost of sugar to the bailer. Sorry, Amar no, Srijit will have to give it to Amar, sorry. Azhar consigned electronic goods for sale to Aziz. Aziz employed Rahim, a reputed auctioneer, to sell the goods consigned to him through auction. Aziz authorized Rahim to receive the proceeds and transfer those proceeds once in 45 days. Rahim sold goods on auction of 2 lakhs, but before transferring the proceeds became insolvent. Assess the liability of Aziz. So this is a contract of substituted agent. He has told Aziz to sell, but since Aziz is not a auctioneer, he has appointed Rahim. While substituted agent, when a substituted agent is employed, he has to report directly to the principal, and he will not report to the sub-agent, and the sub-agent will not be responsible. Only thing to note down here is that when the substituted agent is being appointed, the agent has to do the necessary due diligence and appoint a substituted agent as a man of ordinary prudence would. In this case, he has appointed a reputed auctioneer, so he has done his due diligence. Now if he becomes insolvent, then Aziz will not in any way be responsible for the amount to the principal, because he is nowhere in the transaction. Had he been a sub-agent, yes, he would have been responsible, but here, because it's substituted agent, he will not be responsible to the principal. Manoj guarantees for Ranjan, a retail textile merchant, for an amount of rupees 1 lakh, for which Sharma, the supplier, may from time to time supply goods on credit basis to Ranjan during the next 3 months. After 1 month, Manoj revokes the guarantee when Sharma has supplied goods worth credit of rupees 40,000. Referring to the provisions of Indian Contract Act, decide whether Manoj is discharged from all the liabilities to Sharma for any subsequent credit supply. What would be your answer if Ranjan makes default in paying back Sharma for the goods already supplied on credit of 40,000? So here this is a question based on your continuing guarantee, that when there is a continuing guarantee, the surety is responsible till the time the revocation of guarantee is done. After revocation, if there is any transaction between the principal debtor and the creditor, then the surety will not be liable, because he has revoked the guarantee, has given the notice of revoking the guarantee. So here first is that any sale of goods after revocation, then the surety will not be liable. 40,000, which was before revocation, for that if the default is made by the principal debtor, then in that case the surety will be held liable. Aarti is a wife of Naresh. She has purchased some saris on credit from Messrs. Rainbow Silk, Jaipur. Messrs. Rainbow Silk, Jaipur demanded the amount from Naresh. Naresh refused. Messrs. Rainbow Silk filed a suit against Naresh for the said amount. Discuss in the light of provision whether this rainbow silk would succeed. So here the first thing is that there is a doctrine of privity of contract between who? Between rainbow silk and the wife Aarti. This concept is not anywhere explained in the module. It's not even covered anywhere remotely. But this has been included in your, this has been asked in your May 19 question and also included in the May 22 module, the questions which are given after the chapter. It's been included here, so it's advisable to go through this question before your examination. There are 4 points you have to remember, and just read those 4 points, write those 4 points, and the answer is done. One is that there's a doctrine of privity of contract. The husband is is not responsible because it is the agreement between Jaipur silk and rainbow silk and wife, but husband can be sued because there is a married woman and they are living together, they have husband wife relationship, so he is responsible for him for her, except when in the following cases. These are the 4 points which I want you to remember. First is the goods supplied are not necessaries. If something luxury is supplied, like big diamonds are supplied, which is not a necessary, then in that case the husband is not responsible. The wife is given sufficient money for purchasing the necessity. If she has money and she has been given money, then the husband will not be responsible. Wife is forbidden from purchasing anything on credit, then again the husband is not going to be responsible. And the trader has been expressly warned not to give anything on credit to the wife, then in that case the husband is not responsible. So these 4 points very relevant for your May 22 examination, because this is something which can be asked in your examination, and this is also being asked in your May 19 exam. An agent is neither personally liable nor can he personally enforce the contract on behalf of principal. Comment. Here again the question is that the principal is responsible for the acts of agent. We will write down what are the exceptions when the agent is personally liable, when he is acting outside the scope of authority, or he is representing himself to be the principal, or he has not disclosed the name of the principal. All of those things we'll write down here. What is the liability of making bailee making unauthorized use of goods bailed? He will be responsible to the principal. We'll have to write that down. Shushti acquired a valuable diamond at a very low price by a voidable contract under the provisions of the Indian Contract Act. The voidable contract was not rescinded. Shushti pledged the diamond with Mr. V.K. Is this a valid pledge under the Indian Contract Act? So if you're taking something under a voidable contract and if you're pledging it before the contract is rescinded, it is a valid pledge. Once the contract is rescinded, then you cannot pledge it. Whether a pawnee has a right to retain the goods pledge? Yes, till the time the payment of the goods is not made, or the payment of the loan, that the money that is being borrowed is not made, pledgee the pawnee has the right to retain the goods pledged. Bhupendra borrowed a sum of rupees 3 lakhs from Atul. Bhupendra appointed Atul as his agent to sell his land and authorized him to appropriate the amount of loan out of the sales proceed. Afterwards, Bhupendra revoked the agency. Discuss whether the revocation of agency is lawful. So this revocation can be done by different ways, is something which we all know, but this is a question based on irrevocable agency. Okay, very important concept. Irrevocable agency is where if the agent is interested in that particular matter, then the agency cannot be revoked. Here he has appointed him to sell the land, but he is interested in the sale of land because he is going to get his money out of the sales proceeds of the land, and hence the agency becomes irrevocable. It cannot be revoked. Even tomorrow if the principal dies, even then the legal heirs cannot revoke the agency because the agent is interested in that particular agency. Agent is interested in the agency. C advances B rupees 2 lakhs on the guarantee of A. C has also taken further security of the same borrowing by mortgage of B's furniture worth rupees 2 lakhs without the knowledge of A. C cancels the mortgage. After 6 months, B becomes insolvent and C sues A for his guarantee. Decide the liability of A. The market value of furniture is rupees 80,000 under the Indian Contract Act. So they are testing your knowledge on two concepts. First is that the guarantee is there, and when the guarantee is given, the surety, if the surety is called for to pay, then he has the right against the creditor for all the assets that the creditor has taken as security from the principal debtor. So in this case, whether the surety is aware, not aware, doesn't matter. He has the right to the assets which the principal debt, which the creditor has taken from the principal debtor. So here he has taken 2 lakh worth of furniture, so he has the right to set off. Now he has to pay 2 lakh rupees. The furniture today is worth 80,000 rupees. So once he makes the default, the creditor will go in the market, sell the furniture, he will get 80,000 rupees. So surety only has to pay the balance amount, that is 2 lakh minus 80,000, that is 1,20,000 rupees, correct? X has made an agency agreement with Y to authorize him to purchase goods on behalf of X for the year 2020 only. The agency agreement was signed by both and it contains all the terms and conditions of the agent. It has a condition that Y is allowed to purchase goods maximum up to rupees 10 lakhs only. In the month of April, Y has purchased single item worth 12 lakhs from Z, an agent of X. The market value of the item purchased was 14 lakhs, but a discount of 2 lakhs was given by Z. The agent Y had purchased this item due to heavy discount offered and financial benefit of X. After delivery of the item, Z had demanded payment from X as Y is the agent of X, but X denied to make the payment, stating that Y had exceeded his authority as an agent, therefore he is not liable. Z has filed a suit against X, whether Z will succeed in the suit filed against X. So first thing to remember is that the agent has to act within the scope of authority. This is a principal rule. He has to act within the scope of authority, only then he can make the principal liable. If he is acting outside the scope of authority, he will not make the principal liable, no matter how lucrative the offer is. If he is purchasing 14 lakhs of goods for rupees 10, even then the principal is not liable because he has acted outside the scope of authority. So in this case, he will not, the Z will not succeed against X because he has the agent has acted outside the scope of authority. So if he has to recover anything, he'll have to recover it from the agent himself. Mr. CB was invited to guarantee an employee, Mr. BD, who was previously dismissed for dishonesty by the same employer. This fact was not told by Mr. CB, and later on the employee embezzled the funds. Whether CB is liable for the financial loss of the surety, here surety has given a guarantee, but there is, what clause will it be covered under? Misrepresentation and concealment. There has been concealment of fact that this employee was already stealing something earlier also. He was not aware. Had you been aware, would you give the guarantee? You would not give the guarantee. So because there has been concealment of fact, the surety is discharged from his liability. Mr. X agreed to give a loan to Mr. Y on security of 4 properties. Mr. A gives guarantee for the loan. Actually, Mr. X gave a loan of a smaller amount on the security of 3 properties. Whether A is liable to as a surety in case Y fails to pay. So here important thing to remember is that first is that the surety was not aware that there is a variation in terms of contract. If he is not aware, he is not responsible. You can refer to Thomco Bank if you want to. Then in that case, Thomco Bank has said that if the variation is such that it is beneficial to you, that case study, but institute has not used that. So if the variation is beneficial to you, then in that case the surety cannot be discharged, but that is a case study and you can give a reference to that if you want to. Institute has in none of its material, including your module exam papers, none of the materials given reference to the Thomco Bank, but in the module while explaining the concept they have referred to Thomco Bank decision. So if you wish to write it, you can write it. If you don't write it, it's perfectly okay. Distinguish between contract of indemnity and contract of guarantee. Next is Radheshyam borrowed a sum of rupees 50,000 from a bank on security of gold on 1st of July 19 under an agreement which contains a clause that bank shall have a right of particular lien on the gold pledged with it. Radheshyam thereafter took an unsecured loan of 20,000 from the same bank on 1st August 2019 for 3 months. On 30th September, he repaid the entire secured loan of 50,000 and requested bank to release the gold pledged. Bank decided to continue the lien on the gold until the unsecured loan was paid. Discuss in the rights of Indian Contract Act whether the act of the bank is valid. So two things here we have to write is, first is that banker have a general lien on the goods. Banker, factor, warfingers, brokers, attorney of high court, all of these people have a general lien on the goods, which means that they can recover the lien given on other things also, unless there is a contract to the contrary. So here they have already contracted that the bank will have a particular lien on the good. So now there's a particular lien. So once 50,000 is paid, the gold has to be given back. So here the bank cannot withhold the gold once the 50,000 has been paid. It cannot adjust it towards the repayment of unsecured loan of rupees 20,000. Had they not had the agreement of particular lien, agar ye line nahi diya rehta, if this was not here, then in that case he could have, because he has a general lien on the good. So first you will have to write down who have the general lien on the good. They want to see whether you know who has general lien, and then give your answer on particular lien. Explain whether the agency shall be terminated in the following cases. A gives authority to B to sell A's land and to pay himself out of the proceeds the debts due to him. Afterwards A becomes insane. Normally insane ho gaya to agency will be terminated, but here because it is a irrevocable agency, because the agent is interested in that particular matter, then in that case agency cannot be revoked. A appoints B as agent to sell A's land. B, under the authority of A, appoints C as an agent of B. So under the authority he has appointed the sub-agent. Afterwards A revokes authority of B but not C. What is the status of agency? So first you say that appointing a sub-agent is not valid unless it is authorized. In this case, because it is authorized, he has appointed a sub-agent. Once the agency is revoked, the sub-agent is automatically revoked because he is not directly reporting to the principal, he is reporting to the agent only. Satya has given his residential property on rent amounting to rupees 25,000 per month to Tushar. Amit became the surety for payment of rent by Tushar. Subsequently, without Amit's consent, Tushar agreed to pay a higher rent to Satya. After a few months, Tushar defaulted in paying the rent. Explain within the provisions of Indian Contract Act what will happen. So here again the same thing, that if there is any variation in terms of contract, then the surety will not be liable if the variation is done without his consent or without informing him. Paul, a minor, purchased a smartphone on credit from a mobile dealer on the surety given by Mr. Jack, a major. Paul did not pay for the mobile. The mobile dealer demanded the payment from Mr. Jack because the contract entered with Paul, the minor, is void. Mr. Jack argued that he is not liable to pay the amount since Paul, the principal debtor, is not liable. So he's like, if he is not liable, how will I be liable? Correct? Whether the argument is correct, what will your answer be if Jack and Paul both are minors? So first thing here is that when you are entering into a contract of guarantee, the principal debtor can be a minor. When he is a minor, the contract is between the surety and the creditor. So in this case, since Paul is a minor, Jack is responsible since he is a major, and the contract is between the two of them. Secondly, the surety can never be a minor. Principal debtor can be a minor, but surety can never be a minor, and hence if Paul and Jack both are minor, then in that case he cannot recover anything from both of them and he will just have to bear the loss. Mr. Stephen owns a chicken farm near Gurgaon where he breeds them and sells eggs and live chickens to retail shops in Gurgaon. Mr. Fleming also owns a similar farm near Gurgaon doing the same business. Mr. Fleming had to go back to his native place in Australia for 1 year. He needed money for travel. So he had pledged his farm to Mr. Stephen for 1 year and received a deposit of 25 lakhs and went away. At that point of time, the stock of live birds was 1 lakh and eggs was 10,000. The condition was that Fleming returns, he will repay the deposit and take the possession of his farm along with the live birds and eggs. After 1 year, Fleming came back and returned the deposit. At that point of time, there were 1,09,000 live birds and 15,000 eggs. Mr. Stephen agreed to return only 1 lakh live birds and 10,000 eggs. Whether this act is correct as per the Indian Contract Act. So here this is testing your knowledge on accretion to the goods that have been given, correct? So the accretion to the goods has to be given. In the module we have given the example of cow and calf, wherein you have given the cow, and once you come back there is a cow along with a calf, then the bailey or the pony, depending on what question, here it will be a pony, will have to return the entire thing, that is 1,09,000 live birds along with 15,000 eggs. Last question for the day. A rented his house to B on lease for 3 years. The lease agreement is terminable on 3 months' notice by either party. C, the son of A, being in need of separate house to live, served a notice on B without any authority to vacate the house within a month and requested his father A to ratify his action. Examine whether it shall be valid for A to ratify the action of C, taking into account the provisions of Indian Contract Act. So here it is where the agent has done something on behalf of the principal and he is asking him to ratify. What are the essentials of ratification? A principal can ratify the act, but here in this question, if he ratifies the act, it is causing a loss or damage to the person who has rented the house, Mr. A. Yeah, B, sorry. Yeah. So to the person who has rented the house, and hence here the principal cannot ratify the act. If it is causing any loss or damage to any other person by ratification, then he cannot ratify the act. So these are the questions pertaining to Indian Contract Act. It are mostly practical questions, also mostly based on your guarantee, bailer, bailey. Very simple questions, nothing to be very scared of, nothing extraordinary, except for that one question of husband and wife, which is a little different, which is not covered or which we have not studied. But yes, it includes simple questions, easy to answer. So go through this, and all the very best for your examination. Thank you so much.